Hello everyone, welcome back to another video with Magic Gains. Today we have an exciting topic to dive into, stock market investing for beginners. If you've ever wondered about stocks, shares, and how ownership in a company works, you are in the right place. In this video, we'll break down the basics of the stock market and give you a clear understanding of how it all works. So without wasting time, let's get started. If you are new to this channel, please consider support us by hitting the like and subscribe button. Click the notification bell to be among the first to know when we release our newest contents. Don't forget to follow us on Instagram at MagicGains. To start off, let's demystify the term stocks and shares. In the world of investing, a stock is a unit of ownership in a company. When you buy a stock, you are essentially purchasing a small piece of that company. These pieces are known as shares, and they represent your ownership stake. The price of a stock can go up or down based on various factors, including the company's performance, industry trends, and overall market conditions. Investors can buy and sell these stocks on stock exchanges like the New York Stock Exchange or the NASDAQ. So why do companies issue stocks in the first place? Well, it's a way for them to raise capital. That's money to fund their operations, research, and expansion. When you buy shares of a company's stocks, you're essentially contributing to its growth and success. Think about companies like Apple, Amazon, and Google. They've all issued stocks to the public to raise money for their projects. In return, investors become partial owners of these companies. Investing in stocks can offer both reward and risks. On the positive side, stocks have historically provided higher returns compared to other investment options like bonds or savings account. This potential for growth is what attracts many investors. However, it's important to remember that the stock market can be volatile. Prices can go up and down dramatically in the short term, which means you might experience losses as well as gains. So it's really crucial to do your research and have a long-term perspective when investing in stocks. Now let's talk about the different types of stocks you might encounter. The most common type is common stocks. When you own common stocks, you have the potential to receive dividends. That's a portion of the company's profit distributed to the shareholders. On the other hand, there's preferred stocks. Preferred shareholders usually have a higher claim on the company's assets and earnings, but they might not have the same voting right as common shareholders. If you are ready to dip your toes into the stock market, here's how to get started. 1. Education. Learn the basics of investing like we're doing right now. Then you set goals. Define your financial goals and risk tolerance. Next, set a brokerage account to buy and sell stocks. Then you do your own research on the companies that you're interested in. Finally, you diversify by spreading your investment across different companies in the industry. And there you have it, a beginner's guide to stocks, shares, and ownership in a company. Remember, the stock market is a fascinating world with opportunities for growth, but it's important to approach it with knowledge and caution. Start small, learn from your experiences, and consider seeking advice from financial professionals. If you found this video helpful, don't forget to like and subscribe to Magic Gains for more insightful content. Feel free to leave any questions in the comment section below. We'd love to hear from you. Thanks for watching and happy investing.